students, welcome. Okay, today was your CA Foundation paper, Jan 2025 attempt. I hope it really went well. The paper was very easy. Okay, let me give you a disclaimer before we start. I know there are some students who, if they see the answers or if they see the discussion of the answers, they might get tensed for the next paper. So for such students, I would always suggest, please watch this video after all your exams, after you have completed all your exams, then you come and watch this video. Okay, let's try to have a quick discussion of CA Foundation Accounts paper. Let's not take too much time on this. Okay, guys, let's start. First one. State with reasons whether the following statements are true or false. Yes, first one. Matching concept is based on accrual concept. Okay, matching concept is based on accrual concept. This is true, guys. Second, customers of business should not be considered as users of accounts prepared by business. They are not interested in knowing the performance of the business. Customer of the business also. If you see chapter number 1, customer of the business is also one of the users of financial statement. So this one is false. Under inflationary conditions, FIFO will not show lowest value of cost of goods sold. Inflationary conditions means what? Prices are going up. If prices are going up, first in, first out, what you purchase first, that will always have the lower value or lower cost. So this is also false. Under inflationary conditions, FIFO will always show lower cost of goods sold. For redemption of preference shares, proceeds from fresh issue of equity shares and debentures can be utilized. For redemption of preference shares, proceeds from issue of shares, equity or preference can be utilized, not debentures. So this is also false. Bookkeeping and accounting are not synonymous terms. Synonymous terms means are they same? They are different from each other. This is 100% true. Bookkeeping is separate. Accounting is also separate. A ledger is also known as principal book of accounts. Ledger is primary book of accounts is journal and principal book of accounts is ledger. So this is also true. So 12 marks, guys, into your pocket. Easy, true or false they have asked this time. Let's go further. Next. 1B, explain 4 main functions of accounting. Chapter number 1. Directly you can pick up from there and you can write that. Okay, from the following transactions, prepare sales return book of K and Company, a ready-made garments dealer. Sales return book they have asked. Now see this. Return received from AAR store, 30 shirts at 300 and 15 trousers at 500 each. Multiply, you'll get the value. Less trade discount, take it in your sales return book. Modern tailors returned 10 frocks which were sold for cash. These goods were sold for cash, so it went into cash book. When it is returned, it will also go into cash book. This will not be there in your sales return book. Return received from Tulip stores, 12 t-shirts at 100 each. Less trade discount, so this will also be in your sales return book. These two things will be in your sales return book. Okay, 2 transactions, 4 marks. Okay, easy question. Next, question number 2A. A firm purchases second-hand machinery on 1st April 2021 for 15 lakh, subsequent to which 2 lakh was spent on its repairs and installation. So the value of the machine is 17 lakhs. Value of the machine has gone to 17 lakhs. On 1st October 2021, same year, another machine was purchased for 9 lakh and cost of installing the machine in a new plant is 20,000. So 9 lakh 20,000. This is your machine 1 and this is your machine 2. The firm also shifted the machinery purchased on 1st April 2021 to the new plant, incurred a freight of 10,000. Shifting the machinery from one location to another location. It is an expense which will go to P&L. It will not be added to the machine. Machine value will remain same. They adopted a policy of charging depreciation of 12% per annum on diminishing balance method. What method they are following? Diminishing balance method. Clear? Okay. On 1st April 2023, this happened on 1st April 2021. 1st April 2023, it was decided to change the method and the rate of depreciation to straight line basis. They changed when? After 2 years. 2 years they have followed WDV only. Okay. On this date, the remaining useful life was assessed as 5 years for both the machines purchased with no scrap value. 1st April 2023, no scrap value. They are going to take the machine value as machine value whatever we get and it will be depreciated under straight line method for 5 years. No scrap value. 1st October 2023, 6 months into the year. First machine became outdated and sold for 2,50,000. On the same day, another machine was purchased for 8,50,000. Estimated useful life of machinery is 10 years and residual value is 3 years. Okay, now what we need to know, machine 1, what is the value on 1st of April 2023? It was 17 lakhs. First year you have removed depreciation at the rate of 12%. Second year you have removed depreciation at the rate of 12%. So 13 lakh 16,480 is the machine 1 value. Machine 2 was purchased on 1st October. 21-22 and 22-23 done. Machine 2 was purchased on 1st October. 9,20,000 minus depreciation for only half year and minus depreciation for 1 full year. So 7,61,024. This is the machine 2 value. These two are the machines which are there. They have asked you to prepare machinery account only for 31st of March 2024. Don't prepare for entire year. So when you're preparing machinery account, your to balance brought down will be this value. To balance brought down will be this value. Okay, 27,70504. These two machines when you add, that is the value that you are going to get. Then what happened on this date? Remaining useful life was 5 years. Okay, for both these machines, remaining useful life is 5 years. On 1st October, the first machine became outdated. This machine became outdated. So what happens? What is the depreciation till date of sale? 13, 16, 480. Okay, divided by 5 years. Will give you how much? 13, 16, 480 divided by 5 years. Your depreciation will be 263, 296. But this is for full year into 6 by 12. You will get 131,648. 131,648 is your depreciation for 6 months. Remove this depreciation for 6 months. You will get the WDV. It is sold for first machine. It is sold for 2,50,000. There is a loss. Recognize the loss. Loss to be debited to P&L. Clear? On the same day, another machine is purchased. 8,50,000. 8,50,000 10 years. So 8,50,000 divided by 10. 85,000 is the depreciation. 85,000. But what happened over here? You can't take 85,000 into 6 by 12. So 42,500. This will be the depreciation for the second machinery. The machinery 2 is used for the full year. So what will happen? Machinery 2 will be depreciated for full year. 761,024 divided by 5. 761,024 divided by 5. You will get 152,205. This is the depreciation for machinery 3. So what you are going to do? Depreciation for new machine is this. Depreciation for the old machine till the date of sale is this. Depreciation for the machinery old machine which is not sold is this. That you are going to calculate. Okay. Okay, 8,50,000. There is also scrap value, no? Yes, it is going to be 8,50,000 minus. There is scrap value here minus 30,000. So you are getting depreciation of 8,20,000, 82,000. So your depreciation will be 82,000. So when you are calculating the depreciation, it is going to be 41,000 depreciation. Okay, 3 assets are there: depreciation, depreciation, and depreciation. And loss which is there, it has to be debited to P&L. Everything is shifted to straight line method. Okay, next we'll go into B. From the following information, prepare a bank reconciliation statement as on 30th June 2024 for Messrs XYZ Limited. Okay, tell me one thing. Are they asking you adjusted cash book? No, only BRS. BRS 10 points are there. What is your starting point? Balance bank column of cash book was overdrawn to the extent of 24,768. Bank OD. Start point is OD as per cash book. Start point is OD as per OD balance as per cash book. Okay. Bank charges amounting to 350 had not been entered in the cash book. So what is your starting point? Starting point is cash book. Okay. Bank charges amounting to 350 had not been entered in the cash book. Not entered in cash book. Passbook they have entered. Add. Balance goes up because it is OD. Check amounting to 88,768 issued before but not yet presented to bank. So cash book you have entered. Cash book balance increases. OD balance increases. So minus. One payment of 4,590 was recorded in the cash book as if there is no bank column. That means they have put it into cash column. Payment not recorded in the bank column. Passbook they have added. So you will also add. Okay. Company paid 15,500 to a creditor and received a cash discount of 2%. But cashier erroneously entered the gross amount in the bank column of cash book. Very common, 15,500 into 2%. That gives you 310. This is the discount. What the person has done, 310 is also entered in the, 310 is also entered. Company paid 15,500, okay, to a creditor and received cash discount. So actually they didn't pay this 310, but cashier has entered this also. So cash book, what happens? Yes. So in cash book, what happens? You have paid 310 rupees more, so you will subtract it. 310 rupees you have paid more, you will subtract it. A debit of 5,700 appeared in the bank statement for an unpaid check. Debit in bank statement, which had been returned marked out of date. Check has been redated by the customer and paid into bank again on July 8th. Debit in the bank. That means bank, the balance has increased, OD balance has increased. You're also going to add it. Check deposited in the bank not yet cleared. That means cash book balance has decreased. So you're going to add it. Sorry, cash book balance. What has happened over here? 1 second. Check deposited in the bank. Not yet cleared. Deposited. That means what did you do? Cash book balance has decreased. You're going to add it. Next you have dividend. 1,980 collected by the bank. Not recorded. Bank it is collected. That means it is going to be minus. Amount of 2340 wrongly credited by the bank to the company account for which no details are available. Wrongly credited to the bank. That means passbook balance decreases, you will also decrease it. On 25th June 2024, the credit side of the bank column. Credit side of the bank column means payment side, okay, of the cash book was overcast. That means you put extra payment. Extra payment means balance increases. Now what you're going to do? You're going to decrease it. This should be your BRS, guys. This should be your BRS. Okay, students, let's go further. Next question. Okay, they have asked question number 3A, I think. They have asked this question for 15 marks. From the following schedule of balances extracted from the books of Mr. Piyush, prepare trading account and P&L account for the year ended 31st March 2024 and balance sheet as on that day after making necessary adjustments. Now, if you see this question is exactly like Ganguly question. Ganguly question from your study material. Ganguly and Gavaskar question, if you take, same adjustments are there. Capital, you know, it will go to balance sheet. Opening stock, this will go to your trading account. Cash in hand, balance sheet. Cash in hand, balance sheet, you can take it as asset. Cash at bank, asset. Investment, asset. Deposit, asset. All 1/4/2023. From starting of the year, it is there. Drawings, minus from capital. Okay, purchases, trading account. Sales goes to trading account. Returns inward. Returns inward is what? Sales returns. Sales return. Okay, minus from this. Subtract from this. Returns outward is purchase return. Purchase return. What you are going to do? You are going to subtract from this. Carriage inwards. Carriage inwards. This will go to trading account, direct expense. Rent will go to P&L. Salary will go to P&L. Sundry debtor is an asset. Sundry creditor is a liability. Bank loan 12% as on 1/10/2023. Be careful. They have taken the loan on what day? 1/10/2023. This is a liability. Furniture as on 1/4/2023. Asset. Interest paid, expense. It will go to P&L. Interest received, income. It will go to P&L. Advertising will go to P&L. Printing and stationery, P&L. Electricity charges, P&L. Discount allowed, P&L. And then discount received will also go to P&L income. Bad debt, P&L. General expense, P&L. Motor car expense, P&L. Insurance premium will also go to P&L. And then traveling expense will also go to P&L. Postage and courier also will go to P&L. Can you see same type of question was there in the study material as well? We'll see what adjustments they have asked. Value of stock on 31st March 2024 is 7,65,000. Closing stock. Closing stock, what will you do? One, trading account, credit. and another balance sheet, you're going to show it as asset. This includes goods returned by customer on 31st March 2024. In the stock, the goods are included to the value of 25,000 for which no entry has been passed in the books. So what will happen? No entry has passed in the books means, can you see sales return here? Sales return will be 1,10,000 plus how much is the sales return? 25,000. So your sales return will become 1,35,000, and you can see your debtor here. Where is your debtor? Sundry debtor will become 2,35,000 minus 25,000. So your sundry debtor is 2,10,000. 2,10,000. Sundry debtor decreases, sales return increases. Sales return will be subtracted from sales in your trading account. Okay guys, next. Purchase includes one furniture item purchased on 1st January 2024 for 10,000. There was some steel table or something in your study material question. Depreciation at the rate of 10% per annum is to be provided on furniture. Okay, so what we have to remember on this furniture, 10,000 into 10% into 3 by 12. That means 250 rupees depreciation. When you are calculating depreciation of furniture, remember this 250. Now, furniture item includes one, purchases includes this furniture. So what we have to do? We have to go to purchases. Purchases how much? 24,95,000. 24,95,000 minus 10,000. That makes it 24,85,000. That is your purchase value. Go to furniture. Furniture is 25,000. So 25,000 plus 10,000. Now your furniture has gone up to 35,000. But on that 25,000, you will calculate depreciation for entire year. On 10,000, you will calculate depreciation only for 3 months. 1 month's rent is outstanding. Okay, 1 month's rent. They didn't tell you where is the rent. Find the rent. Rent. 66,000. 1 month's rent is outstanding. That means 11 months rent is paid. 66,000 divided by 11. That is 6,000. 1 month's rent is outstanding. So outstanding rent will be 6,000. In the P&L, what you will show? You will show 66,000 plus 6,000, 72,000 in the P&L, and 6,000 will be shown as outstanding rent in the balance sheet. 12,000 is payable towards salary, outstanding salary. What you are going to do? Find your salary, 1,15,000. 1,15,000 plus 12,000 you are going to add. Okay, then you are going to show 12,000 as outstanding salary in the balance sheet. Interest paid includes 9,000 paid against bank loan, and interest paid includes 9,000 paid against bank loan. Can you see the bank loan here? 2 lakh. You have the bank loan as 2 lakh. 2 lakh into 12%. But when have you borrowed this? 1/10/2023. That means only 6 months interest will be applicable. 2 lakh into 12% into 6 divided by 12. So 12,000 is the interest. 12,000 is the interest. Okay, but you can see 9,000 is paid against bank loan. So 9,000 is paid. So you have 3,000 which is outstanding interest. 3,000 is outstanding interest. Can you see interest paid? 12,500 we have. Okay. 9,000 is, so what you will do? 3,000 you will add it to interest also, and 3,000 you will show it as outstanding interest in balance sheet also. Okay guys. And interest received pertains to investment and deposit. Investment and deposit. Can you see investment is there 50,000? So 50,000 into 9%. 50,000 into 9%, that makes it 4,500. Okay. Then you have one more here, 3 lakh. 3 lakh into 10%, that makes it 30,000. So total becomes 34,500. Your interest is 34,500. Interest received is 28,500. 34,500 minus 28,500. You have 6,000 of interest receivable. 34,500 minus 28,500. 6,000 is interest receivable. So what you are going to do? This will be added to interest also, and in balance sheet you will show it as asset. Clear? Provide for interest payable on bank loan and interest receivable on investment and deposit. We already provided this. Make provision for doubtful debt at the rate of 5% on the balance of sundry debtor. What mistake you can do over here? Take sundry debtor as 235 and calculate. No. On 210 you are going to calculate 5%. On 210 you are going to calculate 5%. 2,10,000 into 5% is 10,500. 10,500 is your provision for bad debt. Do we already have provision for bad debt in the question? No. Sir, there is bad debt in the question. Let it be, sir. Bad debt in the trial balance means already entry is passed. So PBD will be 10,500, 5%. Insurance premium includes 18,000 paid towards proprietor's life insurance policy. Oh. Insurance premium is that 30,000. Out of 30,000, you are going to remove 18,000. Only 12,000 will be debited to P&L, and this 18,000 will be taken as drawings. If it is drawings, it is going to be subtracted from the capital. Clear? This was your 15-mark question. Trading P&L balance sheet. Easy 15 marks. Same thing we have solved in our marathon classes as well. Yes, let's go to B. X and Y are partners sharing profits and losses in the ratio of their effective capital. Ratio of their effective capital. As on 1st April 2023, they had a capital of 280 and 160 respectively in their capital account. X introduced a further capital of 20,000 on 1st June. 1st June he has introduced capital. Okay, and another 15,000 on 1st October. So you will calculate the effectiveness from 1st June. The months you will calculate from 1st June and from 1st October. On 31st January 2024, X withdrew 25,000. X withdrew 25,000. Now, what year are they following? See, beginning from April. That means they are following financial year. So, for this 20,000 from June, that means June, July, August, September, October, November, December, January, February, March. You are going to give 10 months weightage, 10 by 12. And for this 15,000 which you have introduced from 1st October, so 6 by 12, 6 months weightage. And this 25,000 which is withdrew on 31st of January, 2 by 12, and you are going to subtract that. You are going to subtract 2 by 12. Whatever you calculate 2 by 12, you will subtract. And on 1st August 2023, Y introduced further capital of 30,000. August, September, October, November, December, January, February, March. 8 by 12 weightage you will give for this 30,000. During the financial year, the partners drew the following amounts. Drawings are also there. X drew 5,000 at the beginning of each quarter. 4 quarters are there, beginning of each quarter, calculate. Y drew 1,500 per month at the end of each month. End of each month. So you can use the formula total into rate into end of each month. So 5.5 divided by 12. You can use that formula. As per partnership agreement, profits were to be shared in capital ratio. Effective capital, you have to calculate that. Interest on capital 12% per annum is allowable. Interest on drawings 10% per annum is chargeable. Clear? Calculate profit sharing ratio, interest on capital and interest on drawings. Is this clear, guys? Yes. Are you clear with this? Okay. I think same question is there in study material. A similar question is there in study material. Effective capital you calculate. Then you'll get the profit sharing ratio. Then you calculate interest on capital. Okay. On the effective capital only you calculate directly. Interest on drawings, one is first of quarter and another is end of each month. Yes, that should be an easy question. Let's go into next one. Okay guys, next. A, B, C are partners. Partnership question, 15 marks. Sharing profits and losses in the ratio of 3:2:1. The following is the balance sheet of their firm ABC Trading Corporation as on 31st March 2024. Balance sheet is given. Capital of ABC, general reserve, trade payable. Land and building, machinery, furniture, trade receivable is there. Provision is already there. Stock, joint life policy, cash and bank. Okay, we'll see what happens. C died on 30th June. When did they give us the question? 31st March. C died 3 months later on 30th June. As per partnership deed, the following arrangement was put into effect. Look at the first one. Goodwill of the firm which should be valued at 2 years purchase of average profit of 4 years to 31st March preceding the date of death. If the person dies on some day, 31st March preceding the date of death, you are going to calculate. Profits were given as under. Now see this. 30th June, he died. Before that, 31st March of 2024, Use these 4 years, you will get the goodwill. Okay, so it will be 1,14,000 plus 1,22,000 plus 1,19,000 plus 1,25,000. Divide by 4, multiply into 2. That will be your goodwill. Goodwill of the firm. Goodwill of the firm is 2,40,000. Goodwill will not be opened in the books of accounts. We already know that. And C was to be credited with his share. What is C share here? C share. C share is 1 by 6 into 1 by 6. So 2,40,000. Basically, C share of goodwill will be 40,000. And this will be given by A and B. In what ratio? You have to calculate sacrificing ratio or gain ratio. Sacrificing ratio or gain ratio. You have to see. Go and check. Old ratio is 3:2:1. New ratio is 5:3. You will get the gain ratio and you have to give it. See, if in case one of the old partner is also sacrificing, then even he has to be paid. Okay. Profit till the date of death to be ascertained on the basis of average profit of previous 4 years. Till the date of death you have to give profit. No. And share of C was to be credited to his capital account. What is the average profit of previous 4 years? 2,40,000 is the average profit. Into, what is the share of profit? 1 by 6 into 3 by 12. 3 months. Correct? He has died on 30th June. 2,40,000 into 3 by 12. 10,000 is his share of profit. So we will pass the entry P&L suspense debited or P&L adjustment. You can take P&L adjustment or P&L suspense debited to C's capital. C's capital. That should be it. Assets were to be revalued. Land and building appreciated, goes up. Machinery depreciated, goes down. Furniture fixtures revalued at 1 lakh. How much is the furniture and fixture value? 1,05,000. So furniture and fixture is also going down. Value of stock to be taken as 90,000. How much is the stock value? Stock value is 85,600. So stock value is going up. Okay, simple revaluation points. Put it into revaluation account. Provision for doubtful debt should be increased by 1,800. Not increased to. Increased by 1,800. So we will pass the entry revaluation debited to provision for doubtful debts going to be 1,800. Clear, guys? Sum of 2,40,000 was received from insurance company against joint life policy. How much was joint life policy in the books? 90,000. You got how much? 2,40,000. You can do two things. One, you can pass the entry bank account debited 2,40,000 to partners capital account. Or you can put this into revaluation account also. Okay, bank account debited to JLP account, joint life policy account, 2,40,000. Okay, how much was the value? 2,40,000. 90,000 was already there in the books. So 1,50,000. 1,50,000 is the profit, correct? 90,000 is already there in the books. 1,50,000 is the profit. This is shared between A, B, C in the ratio of 3:2:1. It is shared between all the partners. Clear? Amount due to C was paid to executors. It is not transferred to loan account or anything. It is paid to the executors. So you are going to just make the entry. C's capital account debited to bank account. End the story. Prepare revaluation account, partners capital account and balance sheet. Shouldn't be a problem. Balance sheet, when you are doing, what will happen? Whatever revaluation has taken place, that you are going to do the adjustment. Joint life policy is not going to be there only. Cash and bank account, be careful. You got the money of joint life policy and you are going to subtract the amount that is going to be paid to the executor. That time you will get the cash and bank account balance. Next question, guys. Following are the details of assets and liabilities of Mr. Sarthak for the year ended 31st March 2023 and 31st March 2024. 2 years they have given 5-mark question. Okay, building, furniture, everything. It was decided to depreciate building by 5%. Okay, so this becomes 2 lakh minus 5%. So this will become 1,90,000. I think same question is there in study material again. Furniture is to be depreciated by 10%. So this is going to be 67,500. Okay. On 1st June, additional capital of 40,000 was brought in the business. Proprietor has withdrawn capital of 2,500 per month for meeting family expenses. Prepare statement of affairs on 31st March 2023, 31st March 2024. Find the profit or loss earned by Sarthak for the year ended. So what you are going to do? Building is an asset, furniture asset, inventory asset, liability and liability. So what you are doing, when you are doing 31st of March 2023, you will get the capital on 31st of March 2023. Okay, balancing figure will be capital. Now to that what you will do, additional capital. Add 40,000 additional capital minus drawings. Drawings is going to be 2,500 per month. So 30,000 you are going to subtract. 30,000 you're going to subtract. So you'll get some value over here. Okay, and then you calculate balancing figure here also. Calculate the balancing figure here also. That time you'll get capital on 31st of March 2024. Whatever difference you get, that is going to be profit or loss. Are you getting this? Whatever difference you get between these two numbers will be the profit or loss. In case this number over here, if this number over here, it is higher and capital is lower, okay, that means it's a loss. If this number is lower and capital is higher, balancing figure is higher, that means it is profit. Okay, simple 5-mark question from incomplete records they have asked, nothing else from incomplete records. Remember, we have always been telling either they will ask final accounts big question or incomplete records big question. They ask final accounts. Okay, let's go to the next one. 10-mark question, 5A. From the following income and expenditure account, what have they given? Income and expenditure account they have given for the year ending. You are required to prepare receipt and payment account for the year ending 31st March 2024 and balance sheet on 1st April 2023. Balance sheet as on 1st April 2023 they have asked. They are asking you what receipt and payment account for the year ending and balance sheet, opening balance sheet they have asked, not the closing balance sheet. Okay, understand this. Income and expenditure account is there given. Lawn maintenance. Okay, lawn maintenance will go into payment. General expense will go into payment. Stationery depreciation will not go to receipt and payment account. Depreciation is a non-cash. Depreciation on sports material, it will not go into receipt and payment account. Honorarium will be going into payment. Okay, surplus will go into balance sheet. So it's not going to bother us. Subscription, receipt, admission fees. Admission fees, anywhere they have told admission fees is to be capitalized. No, receipt. Okay, sports material second hand you have purchased, receipt. Okay, and then entertainment is also receipt. This is basically sale of sports material, sale of second hand material. Okay, now see what they have asked. Cash at bank, opening balance is there, closing balance is not there. This will be the balancing figure of receipt and payment account. When you prepare receipt and payment account, this will be your balancing figure. Stock of sports material 30,000. Sports material is 30,000. Closing they have asked. How will you calculate sports material closing? 30,000 is there. Depreciation on sports material is there 22,000. 22,000 you should be able to get. Now see the fun here. Sports material depreciation 50%. Stationery depreciation 25%. So if depreciation is 22,000, sports material depreciation is 22,000. This is 50%. That means what is 100%? It should be 44,000. No. What should be 100%? Sorry. Yes. What should be 100%? It should be 44,000. But can you see here it is 30,000. That means 30,000 plus 14,000. Then it becomes 44,000. That means we know that there is a purchase of sports material. Purchase of sports material. This purchase also will go into receipt side. Sorry, what am I talking? This will also go into payment side of receipt and payment account. Are you following this, guys? Opening balance they gave, depreciation rate they gave, and depreciation amount they gave. Depreciation of sports material is 50%. So depreciation is 22,000. So 50% is 22,000. How much is 100%? 44,000. But can you see opening balance was 30? How did it become 44? If they purchase, it will go into payment side of receipt and payment account. Clear? That is one thing. Then next, depreciation on stationery is 25%. They are telling. Stationery is 25%. So now 1,500 is the depreciation on stationery. Stationery, what they have given? Stationery opening stock is given, closing is not given. So 1,500 is 25%. How much is 100%? So this becomes 6,000. How the 4,000 became 6,000? Here also if you see, there is a 2,000 which is purchase. 2,000 purchase of stationery. You won't find this purchase in income and expenditure account. Why? Income and expenditure account is like P&L. You won't find purchase of asset there. So that will also be considered. 2,000 also you have to put. There is also one sale of sports material. Sale of sports material. So what happens now? 44,000 is there. Yes. 44,000 is on which we have calculated depreciation. Sale of sports material. Let's assume that you have sold it on the last day. Okay, let's assume that you have sold it on the last day. If you have assumed that this is sold on the last day, on this there is going to be full depreciation. If you assume that it is sold on the first day, then on that there is going to be no depreciation. Clear? That is one thing you have to be careful when you are calculating. Okay, when you are calculating purchase, for example, when you are calculating purchase, what you are going to do? 30,000 became 44,000. 44,000 at the end of the year. After sale, before sale. So better to assume, take the assumption that it is sold at the first day of the year itself. Okay, and 2,400 sports material, sale of second hand material. You can do one thing, it is scrap. Okay, you can take it as scrap sale also. It is not going to be bothering us in our depreciation calculation. This is one tricky area which is there, you have to be careful about. Okay, because they have not told the date on which it is sold. Now, can you see over here? Tournament fund. After deducting tournament expenses, 14,000. Tournament fund, it has become 6,000 after deducting. So receipt and payment account, what you are doing? Tournament expense, you are going to take it as payment, and tournament fund is 6,000 after deducting. So 20,000 is taken as receipt. 20,000 receipt, 14,000 payment in your receipt and payment account. Donation for club building, this is going to be taken as receipt. Subscription due is given. What will you do? Subscription due, you have to be careful when you are calculating over here. 1,05,000. Okay, last year's outstanding or last year's receivable. Okay, would have been received this year. So you are going to add 10,000 plus 10,000, and this year's receivable will be received next year. So you're going to subtract 15,000. So it becomes 1 lakh. This will be the receipt of subscription. Now, stationery stock 4,000, closing we have already calculated closing stock. Now what did they ask you? Balance sheet on 1st April. They didn't ask balance sheet on 31st March. They asked balance sheet on 1st April. Opening balance sheet they want, and they want you to prepare the receipt and payment account. 10 mark question. Clear guys? Yes. Let's go to the next one. Attempt any one of the two they have asked. Mr. A accepts 2 bills of exchange on 1st June 2024 for 1,50,000 and 60,000. 2 bills of exchange drawn on him by Mr. B. B is the drawer, A is the drawee. Bill of exchange for 150,000 is for 2 months, and bill of exchange for 60,000 is for 3 months. First one is for 2 months, other one is for 3 months. Mr. B got the first bill discounted with the bank, 1,49,000 on June 3rd. Okay, that means 1,000 is discounting charges. On August 2nd, Mr. A requested Mr. B to cancel both the bills and drew a new bill on him with the combined amount of both the bills along with interest of 12% per annum for a period of 2 months. So first bill is discounted. No guys, that you have to reverse. That when you are reversing, what you are going to do? See, journal entries in the books of B. B is the drawer. So for first bill when you are reversing, you will pass the entry A's account debited to bank. You have to pay bank. Second bill when you are reversing, you will pass the entry A's account debited to bills receivable. So now you have 1,50,000 plus 60,000. Total bills are 2,10,000. They said along with interest 12% for a period of 2 months. So 2,10,000 into 12% into 2 divided by 12, you are going to get interest of 4,200. So 2,14,200 is going to be the value of your new bill. Interest is an income, but it is not received. Interest is an income, but it is not received. 2,14,200. So interest will be credited. Bills receivable will be debited for the entire amount, 2,14,000 before the due date of the renewed bill. Mr. A becomes insolvent and only 40 paisa is received. So 2,14,200 into 40%, that is 85,680 received. 2,14,200 into 60%, 1,28,000 Pi 20 is going to be bad debts. Okay, simple question, guys. So 40%, 40 paise in a rupee could be recovered. So 40 paise is recovered. 60 paise is not recovered. 60% is going to be taken as bad debts. Easy 5-mark question. Or they have asked one more. Following details are available of raw material of manufacturing unit. Okay, let's go into that one. Okay, next question, guys. Following details are available for a raw material of the manufacturing unit. Opening stock is given. Purchases issued for consumption. Purchases again issued for consumption, issued for consumption. We have these kind of questions in the study material as well. 5-mark question from inventory. Manufacturer also incurred the following expenses. Freight 300, unloading 150. Let him incur. No problem for every purchase respectively. Warehouse rent is also there. Administrative expense is also there. You are required to find out the value of inventory if the company follows weighted average method or FIFO method. 2.5 marks, 2.5 marks for both the methods they have given. You have the situation here. Weighted average method, whenever you are issuing, follow, calculate weighted average price and issue at weighted average price. Here also weighted average price, here also weighted average price. If it is FIFO, whatever is the earlier stock, utilize that and make the issue. Clear, easy 5-mark questions. Then study material as well, same question is there. Next, 5C. A company had issued 20,000 8% convertible debentures of 100 each on 1st April 2023. 8% partly convertible. Debentures are due for redemption on 1st June 2024. Okay, no problem. The terms of issue, debentures provided that 30% of the debenture will be converted into equity shares. Nominal value 10 at a price of 20 per share and remaining will be redeemable at a premium of 5%. 30% of the debentures will be converted. 30% of the debentures. So 20,000 debentures into 100 rupees. That makes it 20 lakhs. 20 lakhs. So now what you are going to do? 30% will be 6 lakhs. And remaining will be 70% will be 14 lakhs. Now 6 lakh whichever is there, no. It is converted into equity shares they said. Calculate number of equity shares to be allotted to the debenture holder. Clearly they said remaining will be redeemable at a premium of 5%. That means for this there is no premium. So 6 lakhs divided by 20. 6 lakhs divided by 20. 30,000 shares. 30,000 equity shares are issued. Clear? Okay. Give necessary journal entries related to conversion and redemption of debentures, assuming that the company has created DRR. Company has created DRR. So what will be the DRR amount? 20 lakh into 10%, 2 lakh DRR. Okay. 20 lakh into 15%, 3 lakh is DRR investment. Now here they have told also invested required amount for redemption of debentures at the time of issue. DRR investment is sold at par value. So what you will pass? For this you will pass the entry bank account debited to DRR investment, and for this you will pass the entry at the end. After everything you will pass the entry DRR account debited to general reserve. These are the two additional entries. Then what you are going to do? Due entry. First you will pass the due entry for redemption. Then you will pass the conversion entry. For conversion what you will do? Debenture holders to equity share capital. For remaining what you will do? Debenture holders to bank. The premium which is there, premium, securities premium account debited to premium on redemption, or P&L account debited to premium on redemption. Premium of 5%. So this will be plus 5%. Clear? This is your easy 5-mark question on redemption of debentures. Okay guys, let's go further. 6A. Okay, 6A sir. Let's see what's happening in the last question. Company accounts. Arpit Limited with an authorized capital of 20 lakh divided into equity shares of 10 each. So basically they have 2 lakh shares. Okay, 20 lakh divided into equity shares of 10 each. On 1st June, invited applications for 3 lakh equity shares. Authorized capital is rupees 20 lakh divided into equity shares of 10 each. Equity shares of 10 each. Okay, see this one guys. Authorized capital of 20 lakh, rupees 20 lakh specifically, divided into equity shares of 10 each. Authorized capital is 2 lakh shares. On 1st June, invited application for 3 lakh shares. Wow, institute. 3 lakh equity shares at a premium of 5 per share. Can you tell, sir? Issue of equity shares is not possible. Not possible because authorized capital is 2 lakh shares. No, you are going to give a note that all necessary resolutions are passed to increase the authorized capital which is necessary for the issue of shares at a premium of 5 per share. Okay. Amount was payable as follows. Application 2, allotment 7, 2 plus 5. 5 rupees is premium, 2 plus 5. First call 3, final call 3. Okay. Dates are given. Be careful with the dates. Application is invited on 1st June. Application 2 entries, allotment 2 entries, first call 2 entries, final call 2 entries. 8 entries pakka. All shares were applied for and allotted. That means 100% we know that there is no pro rata allotment. Okay. Mr. Naresh, who held 20,000 shares, paid the whole amount due on calls along with allotment money. First call and second call. Both he has paid. This is called as calls in advance. Calls in advance. So what will be the calls in advance amount here? Calls in advance. Naresh holds how many shares? 20,000 shares. 20,000 into 6. 1,20,000 will be the calls in advance. Final call was duly paid except a shareholder having 5,000 shares who paid his due amount on 1st March 2024. So 5,000 shares into 3 rupees. 15,000 rupees will be your calls in arrears. But he has paid on 1st March. He was supposed to pay on 1st Jan. He paid on 1st March. 2 months interest will be applicable. Okay. After 2 months, along with interest on calls in arrears at the rate of 10% per annum. Company also paid interest at the rate of 12% on calls in advance to Mr. Naresh on 1st January. Give journal entries with narrations to record all these transactions in the books of Arpit Limited. Now you have to be very careful, guys. Okay, when you're calculating interest, you have to be very careful. For the first call which is there, advance, this 3 rupees, you will get interest from when to when. From here to here, you will get interest for calls in advance. For the other one, from here to here, interest. Okay, interest has to be calculated. Okay, and for calls in arrears, when you're calculating interest, it is going to be from 1st Jan to, when did they pay the amount? They paid the amount on 1st March. So 1st Jan to 1st March. 1st Jan to 1st March. So 2 months interest. So out of the calls in advance of 1,20,000, okay, for 60,000, 60,000 is the first call amount. 60,000, you're going to calculate interest for 1st July. From 1st July onwards to 1st November. July, August, September, October. 4 months interest. For 1,20,000, out of 1,20,000, the other 60,000, the second 60,000 which is there, you're going to calculate interest from July, August, September, October, November, December. 6 months. And for interest on calls in arrears, it is for 2 months. I hope you got this right, guys. 8 entries will anyways be there. Okay. Interest on calls in advance entries will be there. Interest on calls in arrears entries also will be there. Interest on calls in advance, it is paid on 1st January. Interest on calls in arrears, that is going to be passed on 1st March. 15 mark question, easy. No forfeiture, no reissue, nothing. And the last question is, what are the advantages of double entry system of accounting? They have asked 5 marks, straight picked up from chapter number 1. That should be it, guys. It was an easy paper. Okay. Time could be a restriction. Okay. You always have to know accounts paper whenever you go. Paper can be lengthy, but this was very easy. Very easy paper. Straight up they have picked from study material itself. Okay. So one paper has gone well, guys. Focus on your future paper. Next paper is law coming up. Okay. Focus. Do well. I think you have extra days of holidays also for law. Do well in your law exam and clear your CA foundation exams. And we will meet again in CA Inter. See you guys. Bye-bye.